at the end of the towards the end of the bootcamp, I always tell everybody, don't, whatever you do, ensure you don't become a slave to the market.
Yeah.
Yeah.
we do this for freedom, right? Yeah.
Yeah, exactly.
Not to be a slave.
Well, perhaps people's opinion already changed, though.
Yeah.
All right, so I'll jump right into it, but just give me 5 minutes. Let me use the restroom. Let me drop the curriculum first. Yeah, I hope everybody's here. I'll look out for the next person, please. Okay. Now, concepts of time and price. Okay, Anil, we'll wait for you a little.
Can I ask a question while we're waiting for Neil?
Yeah, sure, you can ask the question.
The question was more of a personal question. In the 3 minutes we have, what is your Forex journey? Like, how did you get started? What was your breakthrough?
So I started trading. Hold on, please. IK, once I start before testing on chat, please remind me to record, okay? So we can post it. All right, so I started trading in 2018, actually, February 2018.
Mm-hmm.
I started with IML, and it was well, for every other trader who is not successful with IML, you know the story. So it's a similar story for all of us. I was really, really good with indicators, though. Not that I was making money with it. Like, really good means I had a lot of indicators that I use. So then my favorite instructor was Dr. Kati Katland. I fell in love with the Ichimoku Cloud trading system, which I never made a dime from. I pushed and pushed and pushed, and I started learning a thing or two about other types of trading. I learned, I had this course that talked about rally-based rally. I'm trying to remember the guy. He's an Asian guy or so. Rally-based rally, drop-based drop, supply, what's the demand and supply, supply becoming demand, demand becoming supply, all of those things, And he's talking about some key levels. Uh-oh. Okay. So he was talking about some key levels and all of that. So I kept applying all of these things. And, as time goes by, at some point I was like, okay, price action is the real thing. Let indicators go. And I started doing price action. And that was when I started to refine everything. Then I got a hold of the leak. At that point, I was already teaching. All along, I was teaching anyways. Even while I was with IML, I actually set up a trading academy in my state there. And I got an office, equipped it. Then I started teaching Forex trading there. At least what we knew, we're teaching it that way. I learned before Smart Money, I learned Wyckoff. No, not Wyckoff. What do you call it?
ICT?
No. I never learned ICT. Wave theory. So I learned wave theory. I don't know if you know of wave theory, guys, but I learned wave theory. That is, it's based on Elliott wave, but Elliott wave is the basics to wave theory. So I learned there's a flat, there's a whatever. I've forgotten about all of them now. So I learned wave theory, harmonics, and all of that. That's what we're applying to, to catch long-term trades, projecting trades into the future, blah, 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 with huge stop losses that we're proud of. 50 pips stop loss, we're proud of though. But there was also Quasimodo, the Quasimodo pattern, a lot of them though. So yeah, but it didn't work out eventually. But at some point, everything started to take shape. And that was when I started to put a little refinement in everything that I learned. I tried to sit to the chart and I learned it too. And then I tried to add this, add that, add this, add that, based on what I was saying too. Then fortunately, everything was going fine. The stop loss started reducing with the smart money. We had some wins, some losses. When I say we, that's because I had a lot of people, a number of people, not a lot, that actually believed in me. So when I discovered something new, I share with them. So we were doing fine then. And to that extent though. Then, but not that consistent. You know how you take one trade, you have a big win, then you take like 5 streaks of losses, but you're still in a win, right? So we're not consistent, but a little bit profitable. Does it make sense now?
Yeah.
Good. So then there was my friend called me and said, oh, they had this course, blah, blah, blah. These guys, they are really good. I should check them out on Instagram. I should look at their, what's in the Telegram channel, and that was RC Visionaries. So I was like, okay, send it, let me see. And I watched it. I was like, well, this is not even too far from what we were just putting together and talking about and all of that. Because even before RC Visionaries, my best trade was 1:50, and that was on Euro JPY. Sorry, USD JPY. I remember that trade. I deleted it from my page. Yeah, from the people page. So, but the wins are not always like that. Then you take long streaks of losses again, and it's annoying. Then I saw somebody also showed me ICT in between. How the guy was trading in 1 minute. This guy literally buys, sells, close, buys, sells, and all of that. Like, wow, this is ingenious. And I was like, well, someday, we tried. And then I looked up his YouTube videos, tried to pick it in or two, but the guy just keeps talking before you can get a point, and it was boring. So I don't like long talks. Like, I like when somebody goes straight to the point. As at that time, his accent was not really easy for me to catch. As at then, so I just let the guy be. But I was like, okay, this guy's really, really good. And I saw his Instagram when he posted. I was posting. I don't know if it was demo or live, but he was actually posting something where he took 5K to, was it 5 million in a few months or so? Yeah, and it was shortly after. The guy posted a lot. He posted on his Instagram also was like, you guys was talking about Instagram posters that most traders on Instagram don't make money from trading. They don't do this. They just take screenshot and they post and all of that. That if you can prove it that you actually make money from trading, blah blah blah, is willing to give $1 million. Whoever is ready to take the challenge, blah 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 blah. And there was nobody, but one guy just came up from nowhere by the name Wally, and I was like, oh yeah, we're taking the challenge, blah 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 blah. Like, okay, who is this guy challenging ICT? Then that was how I got to know about WWA. I think that challenge was a huge marketing tool actually. So that's how I got to know about WWA. And then I was like, okay, these guys, their approach is not perfect. At least I followed them for a while. I noticed what they were doing, and I realized that my trading system isn't that different from theirs. But just that when they catch a trade, they have like 3 pips stop loss. If I catch a similar trade, I have like 12 pips stop loss. So there's something to work on there. Then I noticed, the way they post consistently, it shows some sense of consistency too. So which means profit is being made, right, consistently. But if I catch that trade, I still have a number of losing streaks. So I wasn't really profitable then. I wasn't really consistent then, but a bit profitable, nothing too significant. And I had to put the money together to join WWA because I was broke at that time. I already lost a lot of money to Forex. I've lost a lot of money to Forex in my career. So I had to sell a piece of land to pay for WWA then. Oh, wow. I remember actually reaching out to one of, I don't know, I reached out to the account. I was like, okay, you guys keep secret. I got to know about them when the price was £1,000, but I couldn't afford it. But I joined them when the price was £2,000. It was that bad. I remember they kept increasing it gradually. So I joined them, and one of the, at least I was still contemplating joining or not. But there was this particular time when I decided to join finally. It was when I lost a huge amount of money to Forex. Then within those times, I was seeing Rhyme kept posting. And I contacted him then. I was like, wait, you're part of WWA, right? I was like, yeah, WWA. I was like, okay, no, this is the real deal, because I really got inspired by Rhyme's charts. Like, how can you catch buy? Then next thing you're selling, then next thing you're buying. That's insane. I felt like this is insane. I need to do this. Like, this guy, I always talk about him everywhere I am here. Like, this guy does like 100% daily. Like, look, just take a look. Even a friend who does not even know, if you're my friend and you don't even know anything about Forex, I will still try to explain to you what you don't understand about the chart. And look, he's buying here. This means buy. This means sell. That was how obsessed I was with the whole thing then. So I was really inspired by it. And, I just had to join the WWA and possibly learn that too. But when I joined, I learned a lot of things because it helped refine pretty much everything that I was doing before. But there was just one thing, and that was Rhyme. His trades were just different from every other person's trade within the same community.
Yeah.
So I felt the need for more, and I love teaching. So it didn't take long for me to start sharing Zoom links in the community and start teaching too. Then I wanted more. So fortunately, I kept pushing. I appreciate everything that they did. Fortunately, there was a heated discussion in the community at a particular time, and somebody mentioned something. They were talking about intraday and core concept and all of that. Ryan, blah, 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 intraday. Ryan being the one who brought intraday and all of that. And somebody talked about, somebody just said, wait a minute, Ryan isn't even the only guy that does intraday. The other guys that does intraday. I was just reading through the argument. I don't care what's happening. I'm pretty much still new in the community because I joined in November last year. And this discussion, I think, was in February or so. So I immediately contacted the person and I was like, please, who are the other guys? And that person that I contacted is now my good friend today, Michael. I was like, oh, there is Enja, there is Hughes, you can check them on Instagram. So I went to Instagram and I was like, okay, so intraday indeed is possible. I don't need to keep sitting for a POI or something. So, while I was still on Instagram then, I was trying to pick a thing or two from their chat works that they posted on Instagram. And there's also Rice Precision on Instagram too. I love the way they trade. It's very precise. And I was like trying to pick a thing or two from there too. But, picking a thing or two here and there and being someone who loves to share what he has learned and who loves objectivity, who loves facts and who loves providing answers to most questions. It makes me really, really inquisitive about certain things that I learn. I want to see it play out consistently over and over again before I can provide that as an answer to your question. So while I was still on the gram, somebody posted something. Somebody posted something and I was like, wait, what's this? Is this somebody stacking 1,000 lots or what? I looked closely and I was like, okay. I saw the Instagram and I was like, okay, Anonymous FX Riyad. And I went to Instagram and I checked. I was like, what the fuck? This person is actually stacking 1,000 lots.
Yeah, you mean Anna, right?
Exactly. I was like, what? Is this real? And the person kept posting, updating the story day in, day out, writing stuff. I was reading, I was taking notes. I was taking screenshots, I was taking notes. And she actually took the account from €1 million to €1 billion in 2020. That was last year. Okay, so that was last year.
You said $1 million, 1 million?
Yeah, €1 million. She took €1 million to €1 billion.
Damn.
So I was watching and towards the end of the whole thing, she was being appreciative of the journey, and then she started mentioning something. She said she talked about the people that she respects in the industry. She mentioned Steve Morrow. She mentioned a number of people that she also said, oh, and there's one more person she doesn't want to mention the name. She also mentioned I've forgotten this guy's name. I always forget his name. This ICT guy. So she also mentioned him too. And the name came again and ran away. Okay. So, and in between those discussions, she was like, forget about all these Instagram posters that post as mentors that rip you off your money and teach you nothing. And she said the true mentor you will ever need is the market. I was like, okay, I think that was when I asked her. So I can't remember what really happened, but I can remember the answer anyway. And the answer was all you need to do is wake up daily, go to the market and watch the market, not trade, watch the market. Okay, watch the market. You'll begin to notice the patterns, that the patterns are there every day. The patterns are repetitive. Okay, so it was quote unquote in that format that she said it though. And I was like, okay. And I went back to the chat and I started to see what she's talking about. I started with the new high, new low thing, trend establishment, and it was going well. And at some point I started to notice, oh shit, this guy is getting fucked over again. Then I was like, okay, at this point you're getting fucked over. What is really happening here? Is this getting fucked over consistent? Then it was at that point I was like, wait a minute. I think this is the inducement Rem was talking about. Because the first time I joined Rem's call for inducement, I was like, perhaps I had an idea of what it is, but it was big. It wasn't making sense. And I picked some trades that played out, and I was like, oh yeah, I got it now. This is the inducement he's talking about. Then I took the TradingView link and I sent it to his DM. I was like, bro, please check this. I think this is the inducement you're talking about. Like, I think I understand it now. Well, I didn't get the reply to tomorrow. And now that at the point where it finally clicks to me that, okay, this can actually be called an inducement, that is relating the word inducement to what it actually means. Then I went back to the chat that I sent to Rem. I was like, oh, damn, I was stupid, man. This is rubbish that I marked here. Okay. So, that point of realization, yeah. So I didn't get it at all at that point. But then with what Anna said, I said to put everything together one by one. I studied the charts more than I trade the market.
Yeah. You have to be an honest trader.
Yeah, I study the charts more than I trade the market. So that's how I'm able to put those topics together, those education together. And that is what has brought me to where I am today. Everything Everything about algo trading, about Algohub that we have today started in March 2021, this year.
Okay. New.
So it's not impossible for anybody. So any student you see that is doing amazingly well learned within those period. And March 2021, I'm talking about, it wasn't early March, it was late March. The first set of people that I thought about this thing was in early April. The first set, but the first person that I actually thought was my friend Rhino. Some of you must have seen his Instagram account, Rhino Official.
Mm-hmm.
Anybody here seen Rhino Official on Instagram?
No.
Yeah. I was confused because Rhino do his own mentorship as well?
Yeah, he does. Yeah, he does his mentorship now. So yeah, I gave him the go ahead because it's a free word, man. You can't really hold people. You just need to understand. So this is Rhino. Let me show you guys Rhino. Really, really good. For those who can't wait for what's the name, for the Algohub bootcamp, which is going to be holding quarterly, and for those who can't afford to pay £5,000 for one-to-one, I don't think Rhino has a mentorship for every 3 months or every 4 months. If you reach out to him, he can actually take you. So you can always tell them to reach out to him. He will teach them well because he still remains the best student I would say I have. This is his account. You all say the truth, yeah?
Yeah.
So let me see. Let's look at this. It's a lovely, lovely trader. And unlike myself, Rhino actually loves trading. Me, I don't like trading. I love teaching. So Rhino can trade for long hours, but me, no. I'm done. 2 hours, my target is met. Oh, goodbye. I have better things to do, like resting. So
How long has he been trading for you?
We started the same time. When I started trading in 2018 February, I persuaded him to start. He refused for about 2 or 3 months before he finally gave into it.
Has Rhino had a similar journey to yourself? Has he done a lot of the stuff that you've done, or is it?
No. He has always been in my shadow, but he's standing now. So I learn, I give to him, I learn, I give to him. But when he discovers stuff, when he discovers an education, because he was one who actually told me about the RC dictionary thing. So when he discovers this thing, Rhino is actually a slow learner. Okay, and because of the accent, sometimes you don't really understand what they're talking about. So he sends me the videos or the links. Then I watch it, I study it. Then I put a better understanding to it. Then I shoot it to him. I will be the one to explain it to him again before he understands what it's talking about. So he's like a brother. He was a friend, but we're more brothers now than friends.
Nice.
Yeah. So that's the story summary.
An amazing journey for you, huh?
Yeah, it's been amazing, man.
Yeah.
It's been amazing. 2022 is going to be massive. And I'm glad to have you guys in that journey. So yeah, let's jump into another lie of the market, concept of time and price. Oh, within so time, price must act in so way. Oh shit, totally wrong. Within every time that you have been taught about in the market that, oh, price does this in this timing. If in those timing, okay, you can have it mapped out if you want, but in those timing, if there is no liquidity provided for a trade, nothing is going to happen. The timing is not going to do anything. You understand? The timing is not going to do anything. You see, somebody will do something like this, and then write London Q zone, right? And if you look closely, in this London Q zone, if you have something like this, and then you see the trade will happen, you say, oh, that was a trade in London Q zone. Do you understand? And then price comes here and drops and say, oh, that was London Q zone. And what does the person do? The person comes here and draws BOS and then tells you, what's the name? It tells you liquidity relative equal highs and does something like this. Say liquidity grab, then it tells you what's the loss of momentum, and then it says BOS, then it says IFC. Can you see how the market within those timing? But the real drive of this market in those timing, I believe everybody knows now. See that? Fake BOS inducement, then price started to deliver bearish, and you're already in the trade. If there is no liquidity, the London Q zone, New York Q zone, whatever, would not kill anything.
Mm-hmm.
Does that make sense, everybody?
Yeah.
So what I'm saying is you don't need to pay attention to any timing at all. You don't need to pay attention to any timing at all. All you need to do is define your own trading hours. And in doing this, I'll tell you two things. The first one is for you to practice across sessions and see which sessions is the best fit for you. That is one. Then the second thing is for you to look into your day-to-day schedule and then match it with the session. Because if you start adjusting your day-to-day schedule right now and it affects your income, for example, from other businesses, or it affects your relationship, that is going to in turn affect your psychology. And that could affect your trading too.
I found I was forcing myself to wake up at 6 o'clock in the morning because I thought I had to get ready for the London.
Exactly.
early
You
morning.
don't have to force yourself. Sleep. When you feel energetic,
Yeah.
you know the time you're energetic for the day, you're properly rested, you can come to the market. Even if it is a slow market, you will still catch 5 to 10%.
Yeah.
You come into the market like, oh, all the moves has happened. Your own is, well, those moves has happened. Mine is about to happen. It doesn't matter if it is long or if it's short. You just have to start looking at where's the next efficiency, where's the next investment liquidity, where's the next structural liquidity, where's the next transactional liquidity. Then you mark everything, you build the story, you look at the transfer of money, you pick your trade. Does it make sense now, everybody?
Yeah.
Good.
Yusuf, I just had a question. Would you say it's valid to say that in London, the kind of liquidity, I find a lot in London session, there's a lot more ping pong, and then in New York session, there's a lot bigger moves, kind of more swings. Would you say?
Yeah. So now the thing is, there are certain theories in the market. Okay, there are certain theories in the market that shapes the market. Okay, but we are going to look at the logical approach to it. We're not just going to follow those theories. Now, there are theories of AMD: accumulation, manipulation, and distribution. Right? There are theories of the 3 drops before price rises again by Steve Morrow. AMD is I think ICT also. So there are certain theories in the market. But what you need to understand is what led to these theories. The facts will enable you to understand it better. Okay. Now, what led to these theories is what we should need to focus on, and not the theory itself, because the theory itself is subjective. It's not all the time you have accumulation that it is going to be followed by manipulation. You can have accumulation and then next thing is distribution. Does it make sense? So it is not all the time it happens like that. And you see, this theories is what led to most people calling something the daily cycle. Right? They'll be like, oh, the cycle is complete. Oh shit, that shit is rubbish. Okay. There is nothing like the cycle is complete, because you are not the market. You don't know. You're just imposing that on the market, or maybe you're just trying to give it something fancy. Okay. We always talk about, oh, this market has a daily range, but does it? Does the market have a daily range? Today it does 200 pips, tomorrow it does 150, next tomorrow it does 60. So what we work with is what average daily range. How do you even determine this average daily range? When in 2 months, for example, the market could be doing consistently on the average 150 pips to 200 pips. In 2 months consistently. In another 2 months, it could be doing consistently 50 pips to 70 pips. Then you sit and then you'll be like, oh, the average daily range is 80 or is something. You see, you are just using certain parameters that are not consistent for the period of time. If the average daily range was changing as the market changes, then that's a different thing entirely. But it is not, it is fixed. You'll be like, oh, EU cannot do more than this. Oh, GU cannot do more than this. No, that's subjective. Okay, so is there an objective way to look at it? Yes, there is. And that's exactly what I'm going to show you guys in top-down analysis. Okay, now, excuse me. Now, why does the market tend to do more of ping pong in London or Asia than it does in New York? Why? The reason for that is this. The volume that is being traded in the market in New York is more than that is being traded in London. And the volume that is being traded in London is more than the volume that is being traded in Asia. Okay, so what are we referring to volume? We're referring to money. What is money? Liquidity that is being traded. So in return, if any of this liquidity, since we have more liquidity in New York, if this liquidity is taken, that means there is more money for bigger transactions to happen as compared to other sessions.
Yeah.
Okay, so that's why you see that price springs more in those sessions than the other sessions, most often than not. Does it make sense now?
Interesting. Yeah. Because I always thought that London was the biggest session.
No.
Okay.
Now, if you focus on liquidity cycle, you would begin to notice certain patterns that you can actually infuse into what they call the daily cycle. But that daily cycle thing is actually subjective. You know why? Because it is not consistent. It doesn't happen every day.
Yeah.
Do you understand what I'm saying? It doesn't happen every day. If from the previous day, for example, you could tell that your higher time frame is in an uptrend. Something like this now. Okay. Now, in most cases now coming into the new day, in most cases coming into the new day, if this is your 1 hour time frame and this is your 4 hour liquidity graph now, for example, when price does this and then price goes into the Asian session and then does something like this. Then when you wake up in the morning, London session was somewhere here. Or let's say Frankfurt. What do you think is going to happen next, more than likely? Let's say Frankfurt does this. Do you think price will more than likely continue higher here or not?
No.
No. Where do you think price is going to? Remember what you said yesterday? What liquidity was taken here? Daily liquidity, right?
Yeah.
Not the 4-hour liquidity. This, the higher time frame liquidity is taken, a higher time frame liquidity will be targeted. So price will more than likely still come here. Since price didn't stop here in initial session, it will more than likely take out this liquidity or this one. So which means London session, which means you can actually predict what the day can actually look like. What the day will actually look like on this particular day is that London session or Frankfurt can induce this high and then cause price to push lower. Then in New York, price could do something like this and continue the trend.
Yep.
Do you understand now, everybody?
Yep.
So at the end of the day, what does it boil down to? Liquidity cycle. You guys see that, yeah? And pay attention to this that I just drew. Like, take a screenshot and keep it somewhere because it happens a lot. It happens a lot. And that is where, yeah, that's not a signal, but it happens a lot. And that is where you see most people come and then they'll be like, what's the name? New York, Asian consolidation. They'll be like Asian liquidity, price took out Asian liquidity. Okay, London manipulation and New York expansion, distribution rather, AMD.
So you'd say the daily cycle is subjective, but a liquidity cycle is more objective.
It's objective, yeah. So whatever concept you have about daily cycle, because I have none, okay, I have none. So whatever concept you have about daily cycle, what I need you to do is this. I need you to look at it and pinpoint it clearly if your concept towards daily cycle, your approach towards daily cycle is objective or subjective. And for it to be objective, it has to be in line with what? Liquidity cycle. Okay, and remember, all of these are based on what? Personal observations from the market. Okay?
Okay.
Good.
Because there is sometimes where the market will just take, say, the Asia high, but then continue upwards, and it won't take the Asia low on that day. So then it becomes...
Thank you. Yeah, exactly. Takes the Asia high and then does not take the Asian low. If you look at such days, it's possible that all we have is price being efficient, even hitting equilibrium. Price is just efficient. It took no liquidity here. Everything is here. And during the Asian session, price already took out equilibrium here. And then we're still looking at this level because there's still that liquidity level. Then price comes here in New York, gives you MSU, or it doesn't. And then in New York, it just continues out without going lower.
Yeah. I found that on quite a few days, actually.
Yeah. So you see, that's why I said daily cycle, it's all about liquidity. That's it anyways. Is it clear, everybody?
Yes.
Yes, bro.
Yes. Let's go. So let's go to top-down analysis. Then we have combining everything. That's pretty much combining everything, top-down analysis. Then we'll have 1 minute match, which is a bit of forward testing session. So what we're going to do is we are going to forward test the price action for today. Cool?
Yeah.
You want us to pick another day?
Today's fine.
Everybody, yeah, you can
Today's
vote for any
fine.
day. Today's fine. So the days doesn't matter. Can you guys see my screen?
Yeah.
Yeah, you see my chat here?
Yeah.
Okay. Okay. This was for those guys that I was teaching yesterday. So I haven't even checked my own chat today, actually. So means it's all fresh.
Yusuf, which chart provider do you usually use? Is it Owendo or FXCM?
Aha. That's another important thing too. You see, yeah, it's another important thing too. You see, I combine these three. You see, all I do is EURUSD, Owendo, FXCM, and Forex.com. And in addition to these three, I also combine my MT4 broker feeds on my mobile device because I trade on my mobile device.
Yeah.
The reason is the highs sometimes can be different, or the lows sometimes can be different. So irrespective of how different it is, my final decision is always to go with what my MT4 has.
Right.
Because whatever my MT4 has is mainly controlled by the volume that is being traded by that broker on my MT4.
So whichever your MT4 matches the most is the most.
Exactly. So sometimes it just becomes completely useless. One up can be going well with your IC market, for example. Then all of a sudden, you'll notice that it's FXCM that is going well with your IC market.
Yeah.
So you just have to be watchful for that too.
So add all three of them on.
Yep. I don't really care which one it is. I just jump on chart, pick one, then I start doing my analysis. Then I make sure I compare closely with my MT4. That's all. All right. So let me say.
Do you find that the minutes and the 5 minutes are a lot different, or is it more of a specific time frame, like the 1 hour, 4 hour daily that are different highs and lows on between the charts?
Oh, when we're talking about those differences, we're talking about the 5 minute and the 1 minute, because those are the determinant for your trade. Those differences we're talking about, we're looking at you picking a trade. So that's why it's a decision you make instantaneously.
Yeah.
So you have to be really, really fast with all of the things you're doing at that particular trading time.
Yeah.
Now, yesterday is 30. Okay. So yesterday is first, today is second. I'll just play this guy forward. Let's see. Stop playing. Right. Okay, good. So coming into today, now, when you want to do your top-down analysis, although I don't do my top-down, when I come into my trading day, okay, I don't necessarily have to go to the higher time frame. I only do this once in a while. By higher time frame, I mean daily and weekly. The time frames that I need in my trading day is 1 hour, 15 minutes, and 5 minutes. Okay, so it is when any of these time frames are noisy that I move to the next. So, and I can navigate within those time frames too. However, if it is now the 1 hour that is noisy, I have no other option than to move to the 4 hour. So those are the time frames that I stick to most often than not. Now, today is the 2nd of December. This was what happened yesterday. When you want to analyze the market, how to determine your average daily range, the first thing you want to do when you're analyzing is, first and foremost, why do I have this guy? Yeah, okay. That's right. Good. The first thing you want to do is identify your trading environment. Identify your trading environment. Okay, in doing your top-down analysis, you need to do just 4 things. Just 4 of them. Or should I say 5? Sorry. Oh, I'm sorry. You need to do just 2 things. 2. Okay, you already know the second one. It's just this first one that you don't know. The first one is what? Identify your trading environment. Then the second one is to ask the 4 golden questions. Yeah, they're always golden. And what are they? Where is the next EPA? Right?
Yeah.
Where is the next inducement liquidity? Where is the next structural liquidity?
Okay.
Where is the next transactional liquidity? Is it clear?
Yeah.
Yep.
Good. So now, how do you identify your trading environment? If you look at this, for example, okay, you don't need to start picking out indicator and start looking for average daily range. If you look at this, for example, right here, you'd see that, oh, this market was here, right, for several days, isn't it? These are daily candles. These are daily candles. Okay, range of days, whatever. Okay, if you look closely within this range of days here, you're going to realize that the longest candle we have here is this guy. You won't know until you draw it out because it's just a week. It is longer than this guy. Can you see it now?
Yeah.
Can everybody see it?
Yep.
Yeah.
That's the longest candle you have here, which means within a trading day, on the average, the farthest the market can go is this, up or down. Is it making sense? Now, if you look at this, within all of this level, can you see there was no other candle that is longer than this? Can you guys see it?
Yep.
So if I pick this candle, for example, which of course I can reduce it to this one, because that will be average, because this is the longest, but I'll use the longest irrespective, then I would match it with the current market price from the previous day. You know what this means? This means that the farthest my price could actually go to in this trading day is here. If it is just going to keep going up without going down.
And that's right on by hidden supply demand.
Exactly. You begin to see what is there. Now, if you look at this here, you would see that I didn't say identify supply and demand levels. Do you guys notice that?
Mm-hmm.
You know why? Because when you identify EPA, it covers for your supply and demand automatically. Does it make sense now?
Yeah.
Good. So if I take this guy from this price again to this low, you see that also if it is going to sell, that is the level it more than likely would get to. Can you guys see it now?
Yeah.
Exactly. So this means you have identified your trading environment. You don't need to come to your chart and you want to do top-down analysis. Then you start marking, oh, I have a supply here. I have a supply here. I have a supply here. What are you doing here in your trading day? Do you expect price to just jump here all of a sudden?
So simple but effective.
Okay. So this is better than using anything for average trading range. Now, you've identified this. If you need to identify anything out of these rules, it has to be within what? This high and this low. That's all. So you don't give room for distraction. Now, we look at the sell side before we look at the buy side. When we look at the sell side, if you look closely, you ask yourself, where is the next EPA? Where is the next EPA, everybody? Within this sell side, where's the next EPA? Somebody say something, please. Good. But you see, that next EPA you mark there, does it fall within this trading environment?
No.
So you're giving room for distraction there. So where's the next EPA? You can just come to this level and mark this for now. Yeah, it does not really look like, oh, mitigation or mitigation, but at least we know that is what? A supply level. Like I said, EPA covers for your supply and demand automatically.
So you want to measure your next EPA within your trading environment.
Exactly. Because the chances that price would leave your trading environment on this particular new trading day is low. Or I won't say it's non-existent, but it is low.
Okay.
Yusuf, so it doesn't have to be on that daily chart. It doesn't have to be a set amount of days that you're looking at to pick the largest candle to set the range.
Yeah, it doesn't. You see, every single day, if you look at this candle right here that we picked, which is the longest candle, if you look at everything here, where's the longest candle? It is this one.
Mm-hmm. Okay.
On which particular day was there a candle longer than this? None.
Mm.
Since when? Since August, July, June.
Okay.
Do you understand? So if you have a brand new day and your brand new day is here, because this was where yesterday ended, price will more than likely not leave this range too. It has not done it for the past few months.
Okay.
That's how you define your trading environment.
All right.
That's actually really helpful. Never would have thought that before.
Does it make sense now? So looking at this again, there's nothing else to mark in terms of EPA. What if in terms of the buy, in terms of the buy direction? Do I have anything to mark on EPA? Nothing. Right?
Right.
Good. So we'll move to the next. Where's the next inducement liquidity, everybody? At the moment, for the buy, no. If you look closely, okay, wait, guys, let me zoom this guy out properly so you can see, since we already identified the environment. Okay, since we already identified the environment, if you look at this range closely, the structures you see here now is what? Lower low, lower high, lower low, lower high, lower low. So you see the next inducement liquidity was already taken here. Can you guys see it?
Yeah.
For the buys, now for the sells, but it went ahead and grabbed some form of liquidity here, right? So right now, the next inducement liquidity, you have higher high, higher low, higher high. Price is in between here. So where's the next inducement liquidity right now? Give me the current market structure. It is in the new lower high. This is where price currently is now. Do you understand? Yeah, it cannot be an inducement liquidity because that's transactional. Can you see?
Mm-hmm. Yeah, it's transactional.
So what do? You go ahead and identify price. we forgot something, sorry. Now, if you look at this trading environment, we were looking at here for the next EPA. Let me adjust this guy. I think it will be easier for you guys that way. Let's make this 3, and let's make this. I'm coming. Yeah, let's make this. Because that guy made us miss that thing. Your demand and supply. I think that's better. So you identify your demand and supply. So you see, within this trading environment, price is here. Price left something here. We don't know what it was. We must try as much as we can to identify what it was. Because it's still within your trading environment. And that demand is right there. So you ask yourself, immediately you see this, you ask yourself, what demand is this reacting from? Is it a daily demand or a weekly demand?
Weekly.
Weekly. Why is it weekly? Because of the daily presents a lot of noise.
Yes.
So if you go to the weekly, it's going to be much more clearer. Can you guys see it now?
Mm-hmm.
Yes.
Yeah.
Could you zoom in, please? Yeah.
Can you see?
Yeah. Would you highlight the entire body of that candle right there, and then we find it as go down lower in your time frames?
This one?
No, this one. Would you highlight, like, put the sorry, bad drawing.
You remember when price was coming down, my weekly demand started from here. I'm just using the square because price reacted from here, and because I'm analyzing from this level now. That's why I just reduced it. And more importantly, as we move to lower time frame, I'm actually going to delete this guy. The reason why I'll be deleting this guy is because I always like keeping my charts clean. The purpose of putting it here is to understand the intentions of price and to build my story right.
Okay.
Now let's go back to the daily. Now, so we have marked our supply and demand, our efficiency. Clearly, it is, you can say this is bullish, right? That's broken here, it's retesting. Can go and that, remember what we talked about? You have lower low, lower high, lower low. Then you can connect this and this. Is that not EPA?
Yes.
Yeah. So which means that as this guy pulls back here, we can actually buy from this EPA. Right?
Yeah.
Because it's coming from the weekly demand. Then we also know that this is our next inducement liquidity. Can you say you please pay attention, because how you mark this is the same way you mark it on every damn time frame. It is not different. Now, right here, the next structural liquidity is where? Nowhere to be found. Do you understand? On this time frame. So you don't force it, you let it be. The next transactional liquidity will be sitting above this high, right?
Yes.
Yes.
You are aware of that. So that's all. That's all the analysis you need to do on the daily time frame, nothing more. Can you see it's not complicated? And by this time, what information have you gathered from here? You've gathered that price is efficient, bullish. So you can look for buy opportunity. You've gathered that price grab liquidity here as price was continuing higher here because those highs and those lows, hence that correction. You've gathered that price is coming from a weekly demand. So that is a potential that could still push price higher. Right? As from weekly demand, it could potentially cause a daily structural trend. Can you see that, everybody?
Yes.
Yeah.
Good. So that's it.
Yusuf, so in a live market, I would get a bit confused with this. I understand what you're saying, but I would get confused. Just quickly annotate. Sorry. The prices reacted to the weekly, and then it came and basically took the liquidity from that. Is there not a possibility of that going further down and taking this liquidity to then still go back up?
Now, talking about price coming here, is it possible? Yes. After all, liquidity is sitting here, right? But why jump to this liquidity when you have this one here first?
Okay.
So the purpose is for you to know, like I said, you know everywhere liquidity is sitting in the market, so you take it one step at a time. That's why it is a cycle. You know where efficient price action is sitting in the market, so you take it one step at a time. That's why it's a cycle. Can price come and take this low? Yes. But before price takes this low, where should our attention be on now? It should be on this efficient pricing first, then this inducement liquidity next, then this transactional liquidity next.
Gotcha. Yeah.
So you just take it one step at a time. That's why, I think I mentioned it last time to one of you, never have expectation of price. Just listen to the language and then wait for when it asks you to respond.
Makes sense. Thank you.
You're welcome, man. Now, price, let's move to it. Now, that's all for the daily. Everybody understands that, right? Everybody, please let me know if you understand that.
Yeah. Yes.
Yeah.
Awesome. So from the daily, remember what we're doing internal and external structure. We said daily 4R, isn't it?
Mm-hmm.
Now I get my 4R. You see, this explains why price, you can see that we explained why price took out this liquidity. Remember, this was a higher time frame liquidity, isn't it?
Mm-hmm.
Yeah.
Everybody remembered, right? So
Yeah.
the liquidity that was sitting here, isn't it more than the liquidity sitting here?
Yeah, it's more.
Yes.
So hence why price, that's why I say when price takes out a daily liquidity, or let's say weekly liquidity, price, the next liquidity level below, if it is a 4R liquidity, if it is daily, okay, now daily, weekly, the next liquidity level is 4R liquidity, price will more than likely take this low before it can push higher. And if price fails to take this low, what happens in most cases is that price goes back up and then comes back down to take it. When I see this setup, I have a guarantee trade. Are you guys getting the logic?
Yeah, bro.
Yes.
Yeah.
Because it's all about value for value, higher products.
So what you're saying is there was more liquidity at the top there of that daily, the daily candles than there was at these forward candles right here, correct?
Exactly. There were more liquidity here. That efficient pricing is not enough to hold price to push higher. That is efficient pricing on the lower time frame, not the higher time frame. I don't know what you mean by a body close. Because I don't know
Bro,
what you mean
like-
by a body close.
Bro, like if it's early week, so we call it liquidity grab, right?
Weak, as you guys thought, we thought that weak is a liquidity grab. The answer to that, weak is not a liquidity grab. This week you see here are candles on the lower time frame. That the purpose of this week is to show rejection, which indicates intention to push higher. So that's what you call rejection candle. In most cases, when price grabs a valid demand or supply level, price usually leaves with a wick, indicating intention to push lower or higher. You see this? Intention to push lower. You see this? Intention to push lower. So there is no wick that is special.
No,
Understand,
bro.
bros?
If above there is weak, 1 second. If here there is body close, here it's weak, no? You can see
Here it is what?
here it's weak. If it's body close, it won't probably take this, right?
If it is body close here, it probably won't take this. That's what you're saying?
Yeah.
Okay, good. The liquidity is not dependent on this candle here or this close here. The liquidity is dependent on this high here. Liquidity is sitting on this high. The moment price goes above this high by 1 pipette, that liquidity has been grabbed. It doesn't matter if this was a body close or not. Do you understand now?
Yeah, yes, bro. Yeah.
Awesome. If you don't understand, please let me know. I can go right again. Okay?
Yes, bro. Continue. Nice.
Awesome. Now, can you guys see what happened here? Can you guys see what happened here? Price made higher high, higher low, higher high, higher low, higher high, inducement, right?
Yes.
Inducement already happened. But on the daily time frame, this was not an inducement. This was what? Just efficient pricing. Did you guys remember?
Yeah.
Yep.
So that's why I said, if you're talking to Rodrigo, you know everything about Rodrigo. But when you move to Antoine, the story can change. But they are both humans, so you need to find a way to manage the two of them. That's why you should never assume what another time frame looks like. Go there to see it yourself. So we know, so you see what we're talking about? We know that price right here, let me see. We know that if price goes up now and comes down, this is what? A daily inducement.
Yes.
So this inducement is going to be clear also on the 4-hour as fake as an inducement, but this inducement would more than likely give you more moves if it's going up compared to this one here, because it is an inducement of the higher time frame, indicating that it has more money sitting here as compared to this. If price is going to deliver bullish. Are you guys getting the logic?
Yeah. Yeah.
So it's about understanding that language the market is speaking to you. Now, here, we're on the 4-hour time frame. Okay. On the 4-hour time frame, I always say, don't stress yourself too much. You already understood what the daily is going to do. But another thing is, if you look at the 4-hour randomly, right now, you would see that the average candle movement in these 4-hour candles here is this guy. Am I correct?
Yes.
Yeah.
Yeah.
This one is longer than this, but after this, this is next. So I'm using this as the average. We use the longest on the daily just to have more room to watch out for. Does it make sense now?
Yeah.
Good.
Yeah.
Now, and you can also use the second longest on daily if you like. Now, it means that my next 4-hour candle will more than likely not be longer than this for itself, and more than likely not be longer than this for a buy. So can you see it still falls within the range of the trading environment from the daily two, in this case?
Yes.
So I don't need to start adjusting anything, because what happens is, as you trade, you need to start paying attention to every 4 hour. So once this 4-hour candle close, you want to see what your trading environment looks like, using this as the range to continue consistently like that. That's how price builds up, down, up, down, up, down. So you begin to work within that environment. So that's how you keep creating your trading environment consistently. Do you understand, everybody?
Yeah.
Awesome.
Also, we have a lot more smaller candles than we do have big candles. So a lot of the time we're going to have
Exactly. No matter what, price would not leave this range the next trading day. I can guarantee that.
Yeah.
Now, identify your supply and your demand, right?
Yeah.
We understand that based on the weekly, pressure is still to the upside, so intention is still bullish, right? Then we understand that this guy has grabbed liquidity, so we're looking for whatever it is that this has for us here. So right now, talking about the next inducement liquidity is pretty much the same level. Am I correct?
Yeah.
Now, talking about the next structural liquidity, I believe we can now put that here, right? Sorry. The next structure, the next structural liquidity. Let me delete this guy. I was marking transactional while I had structural in my mind. Okay, so we know that this is the next transactional liquidity, right, everybody?
Yes.
So talking about the next structural liquidity, that will be where? The one we see on the chart right now, here. Am I correct?
Yeah.
Other than all of these liquidity levels, do we see any other one on the 4-hour time frame, given our trading environment?
Sorry, Brian, I didn't understand that part.
Yeah, I said, other than the liquidity levels we've marked down, can you find any other transactional, structural, inducement or EPA within this, our trading environment? Can you see any other liquidity levels there that we haven't marked? No.
And sorry, bro, why that one was structural liquidity there?
This one here. The last low before the main low.
Okay, the main, okay.
Okay. This push itself will more than likely have a what? Structural liquidity. But that structural liquidity can only be found in the lower time frame. This structural liquidity here belongs to what time frame, guys?
Weekly. Daily.
Daily. Because we found it on the 4-hour, which is internal to the daily.
If price would come and take down the lowest low, the main low, would that then become transactional liquidity again?
When price comes and takes out this low,
yeah,
right? Remember, price is still delivering bearish. So first and foremost, we'll see that as transactional liquidity, but anything could happen. But before we even see it as transactional liquidity, what did I tell you guys? I said, just know that there is liquidity here in the first place.
Yeah.
So the market can eventually show you in the future if it was transactional or inducement, but you more than likely would have caught the trade anyways. Make sense, yeah?
Yeah.
Nothing else to do on this time frame, if you ask me. So what do? We move to the 1-hour time frame. Now, we are on the 1-hour time frame. I'm going to be working within my 4-hour trading environment. So I don't need to start defining trading environment again on the 1-hour. Does it make sense now, everybody?
Yeah.
So it's my 4-hour, my daily. So I have all of these levels marked. And this is where market is now. So price can't just jump all of a sudden here, except for when this guy jumped. Oh, you said I can't jump, right? But look at me jumping now. That's what that guy did there. All right. So, boom. Coming into my trading day, I usually starts from the 1-hour. So this is me.
Recording in progress.
All right. So
Was
this is
you
me, right? Yeah, that was me.
Oh, okay.
Yeah, thanks. Yeah, I just want to make a full testing session, remove my voice and post it on YouTube. That's why I'm recording this.
Okay, sorry.
Yeah, no problem. It's fine. Thanks for that's what the community is for. So I have to explain too, because recording is not allowed.
Yeah.
All right. Now, my trading time starts 7 a.m. So this is so now, given my trading time, I don't disturb myself much. I'm just going to play this price till we get here, which is an hour to my trading time. Now, here, I know I'm looking for buy opportunities. Why? Because my daily indicates that I'm bullish, right?
Yeah.
Which is efficient already. Remember that. And liquidity has been grabbed, so we're delivering bullish, which means technically we're in the 4-hour value trading leg, isn't it?
Yes.
So now in this 4-hour value trading leg, what do we have? We have this guy, which is the fake BOS and the inducement, right? Can you guys see it?
Sorry, bro. Sorry. Was not this the value trading leg only if we make the new higher high? No.
Bro, how do you determine your value trading leg? Is it not when you have, is it not the leg that caused what's the name, fake BOS and inducement that is your value trading leg? Is this not your value trading leg that eventually leads to true BOS?
Yes. The true BOS. Okay. I believe that we only can call the value trading leg when we have the true BOS. No.
No, the value trading leg happens after you get the inducement.
Okay.
Now you see here, inducement, isn't it? So here is the value trading leg. Right, everybody?
Okay.
Because we're still delivering bullish. Right? So now, we haven't even left that leg and price just keeps doing all of this. Okay? Even within the leg, we still have inducements too. See that? Within the leg, we still have this push right now that also has this low too. Is it efficient? Yes, it is. As price taps for equilibrium pricing, right? As price taps equilibrium, no, it hasn't. So we have to pay close attention there too. Does it make sense now?
Yeah.
Because there could still be money sitting up top. That's the 1-hour time frame. Then price here, right now, before my trading time, despite understanding that this is bullish, I also understand that this can sell too. Do you understand what I'm saying?
Yes.
Right? This can also sell too. So I have to be extremely careful. So the question is, given where price is at the moment, we ask ourselves this question all over again. Now, everybody, where is the next? Our supply and demand is fine. So where is the next EPA? Boom. Isn't it efficient? Very, at least efficient bullish too. Can see we are trapped in efficiency, everybody. Aren't we trapped in efficiency?
Yeah.
Good. So where is the next inducement liquidity? Mark, guys. I want to see what you mark for me. Okay. For those of you who marked here, well done. For those of you who marked here and here, you didn't do bad. What a number of you might have forgotten is this high, this low. Everything here looks like a significant structure, isn't it, everybody? But it is what?
Substructure.
Can you see it now? So even the substructure still has substructure because you have that high, this low, that high, this is inducement, which means the next thing, everything is still within this low, these levels. So the next inducement in this substructure is sitting where? Here, because this could be the fake POS and this is the inducement. Do you understand now?
Yes, makes sense.
But for price to come to this inducement, is it not going to deliver bullish?
Yes. Yeah.
It's going to deliver bullish. Right? So if price is going to need to deliver bullish, it means that within this region, something needs to happen for price to deliver bullish. And whatever needs to happen here has to be what? The liquidity cycle. But now, everybody, whatever liquidity cycle is here, can you see it on the 1-hour time frame?
No.
No. So since you can't see it on the 1-hour time frame, what is the next time frame to go to?
15
minutes. Because you can't go to the 5 minutes. Why? Because 5 minutes is where you make your decision. And you need to see the higher time frame cycle clearly first before you make that decision. So in this instance, 5 minutes becomes your higher time frame to decide with. Otherwise, you're not ready to pick any trade. You just have to see price, speak more language for you before you can pick a trade. Is it clear?
Yeah.
So now, What do we do? Go to 15-minute time frame. Boom, we're here. Minutes before our trading time. Dum 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 dum. Everything is. Now we're here. So which means we can see that structure clearly. And since you can see the structure clearly, if you look at it closely now, you can tell for sure that price, I would have said, oh, I want to know everything that happened here. But is there any need when I can actually see for sure that liquidity was grabbed? Can you guys see that liquidity was grabbed there?
Yeah.
Okay. Everything is still what? Pretty much, we still say it is efficient. So liquidity was grabbed there. Now, price grabs that liquidity. And then from there, we're like, okay, why don't you deliver bullish? It did, didn't it? It did. It started to deliver price. And then what? It is here right now. But is anybody going to buy this?
No.
No. That dog. That dog. The dog, please. If it's your dog, kindly mute yourself. Whenever you need to speak, you just press. Yeah. So when you need to respond, you just press space bar down, and then I'll hear you.
Yeah, sorry, bro.
No problem at all. So you see that we can't buy this for several reasons. One is the fact that if you look at how this guy came down, he said he marked this one because this was where he took out the structure here. It came down like this, right? And then eventually came here. So technically, this is that high. So which means I need, for me to be able to buy this, for me to say I can buy this, I need price to regain efficiency, isn't it, everybody?
Yes.
Good. So, but if price comes to this low, can you now consider a buy?
Yes.
Yes. So now you ask yourself those questions. Now you understand everything. Ask yourself, where's the next EPA? We need to wait for it, right? But aside from that level, where's the next level you can, where's the next inducement liquidity? Inducement liquidity is where? Sitting here. Am I correct? So you're looking at here for a possible trade right now. Doesn't mean you're going to pick the trade. Then where's the next transactional substructural liquidity? Well, it's still anywhere below here. Can you see it? So still more or less the same thing. Where's the next, aside from here, another level where you have transactional liquidity, structural liquidity on this time frame is here, right? Aside from there, where's the next transactional liquidity? You have it sitting here. Can everybody see that?
Mhm.
Yeah.
Yep.
Then at this point, we know where we want to react from, don't we?
Yep.
So all we have to do is go to the 5 minutes, and now we can now deliver price to see what happens. Boom. Upon getting to the 5 minutes, okay, upon getting to the 5 minutes, I see this. And why I see now is how price came lower. And I can even tell that there's also a possible structural liquidity here. And I can tell that there is, come on. I don't know, hold on, it's hanging. I can tell that there is, oh, hold on. I can tell that there is still money here. Hold on, guys. Allow me to edit this guy quickly. So I can tell that there is this, right? So which means there's still money here. Price can react from here as much as price can react from this structural liquidity. Do you understand, everybody?
Mm-hmm.
I can tell on my 5 minutes, because that's where, this is where the real analysis is. After if I had the higher time frame bias, my next efficiency is where? Here. Am I correct?
Yeah.
Everybody?
Where did you mark? I see your marking.
You can't see my marking?
Where the dotted line you put?
Yeah, that's the marking there. That's what I use for my efficiency.
Okay.
I don't know what's happening. I'm saying, says my network is unstable, so it's fucking me up here, and I don't like this. Hold on, let me quickly check that network. So the same questions is what you ask yourself. Now, do you guys see how we followed everything so far?
Yeah.
Hello?
Yeah,
Can you
yeah,
guys hear me?
Yep.
Okay. Okay, so now you see, when you want to trade, and that's exactly what we'll be following since, which is the trading plan, it comprises of 3 things majorly, then 1 thing to follow. The first item in your trading plan is for you to identify. The first thing you do is identify where you are in the liquidity cycle. And you do that by following the top-down analysis, just like I did. Because that where you are in the liquidity cycle is centered around the higher time frame buyers. Is that clear?
Yep.
The second one is the first one is the where, which is what I just talked about, the where. The second one is the what. Okay, the second one is the what. And that what is centered around the 5 minutes. The what is what did you see before you consider that trade? And what you need to see is either a 5-minute MSU or a 5-minute EPA. It could be any of the two. Have you written that down?
Yep.
Good. Then the third one is the how. How do you intend to get into that trade? And that is highly and mostly dependent on the 1 minute time frame. How did you get into the trade? That is what the 1 minute time frame. So every other rules that you know so far would also guide you in following those 3 steps. Then last but not the least, which is the fourth one, is the target. You target the next liquidity based on your analysis. Target the next liquidity.
But are we targeting the next liquidity on the 5 minute only, and then any higher time frames? Because obviously we've marked the liquidity.
Let me ask you one question. Yeah. You look at, if you understand the liquidity cycle fully, where are the levels you're interested in picking the trade from? Here, right?
Yeah.
Here, right?
Yeah.
And here. Now, given these 5 minutes, there's a possibility here, right?
Yeah.
So if you have a trade here, where do you think will more than likely be the next target following the liquidity cycle?
But the second one.
This one, right?
Yeah.
Exactly. So preferably, it depends on how your analysis is. Your target is mostly the higher time frame liquidity level, but you should be moderate with it and make sure that you grow into it with confidence.
Yeah.
Okay. Personally, which I'll still get there, but maybe I should just say it now. I'll still get there. Personally, I don't hold my trades full volume to the next liquidity level. Once my trade has done 12 pips or 15 pips, I'm taking 80% of the volume out.
Yeah.
Yep.
I'm not greedy. I understand it. I know where it is going to, but more importantly, I want to have power on compound interest over chart analysis. Okay. When you understand compounding, that is more powerful than, oh, yeah, I'm confident and then pride, you're bragging about the wolf. No, just grow your account. Is it clear?
Yeah.
Good. And that will give you room to catch more better trades. What if price comes here? You did not take profit, it goes here, did not take profit, it goes here, and then comes back to take the last low before the main low, smash you out of break even. Do you understand?
Yeah. So did you take 50% after 10 to 15 pips?
Yeah, no, 12 to 15 pips. That's when I take 80% off. That's me. I use fixed lots. I'll be talking about risk management and why I use fixed lots and all of those in community course when we start community course, but not in bootcamp. Okay. You guys got the trading plan, yeah?
Yeah, please. The where, what does it stand for again?
What do you say?
The where, what does it stand for again, please?
The where was the first thing I said. Identify where you are in the liquidity cycle. That was the higher time frame thing. That was the very first thing I mentioned. Am I correct, everybody?
Mhm.
Yep.
Okay, good. So we're here. 5 minutes. Pam, pam, pam. It comes into my trading session. The 15 minutes was not efficient, but is the 5 minutes efficient? Oh, sorry, we forgot to follow this guy. Is the 5 minutes efficient, everybody? Everybody's 5 minutes efficient.
Yeah.
Yep.
Is that not EPA?
Yeah.
So which means I can watch here for a possible trade, right?
Yeah.
Good. That's the first thing I'm going to do. And in doing that, where do I need? I now know the what. Then I go to the 1 minute for the how. Damn, why today? For crying out loud. The network is just acting strange today. Why? Yeah. All right, guys. Just give me a few minutes. Let me end this call.